It's Market Day Report. Well, we're moving markets higher right now, at least our row crops. Let's start with the bean market and soybeans right now. Look at the gains we're seeing. I know it's a front month and it's old crop on July, but 12.16 and 3/4. That's up 39.5 cents. We've been as high as 12.17 and 3/4. So you do the math on that. What is that? 26, nearly 27 cents in there. We've had a big run up here in the bean market already today. We opened higher and just have kept plowing. 12.03 and 3/4 on the November. That's up 33 cents. Let's stay in the complex before we go back to corn. We're higher here with soy meal contracts. You know, last week we had a flash sale reported by USDA of cake and meal to Italy. Now, bean oil moving higher, triple-digit gains. Every contract this year is back up above 70 cents. Now, let's step back to the corn market. Are we seeing gains? And the answer is yes. Now, we haven't broke through the $5 mark yet on December, but we trade $4.96 1/4, up 15 cents. Wheat market, we've seen gains here as well, was driven earlier by dry conditions and then was pulled lower with no announcement from the White House on ag agreements with China. And now that we've got something from the White House, look, July, 6.59 and 3/4, up 24. Hard red is trading 11.5 higher, just a half penny below $7. And the cotton market up 149 points at 83.40. Dewey Stricklers with AgWatch Market Advisors. Dewey, with all of what I kind of threw out there, what's on your radar?
Well, the first thing is, has the scheme of things changed here from last week? And with all what's gone on with the White House agreements and so forth, my answer is no. First, let's look and see what the funds are doing. Your index funds have a record long position in soybeans. That should get your attention. Two, you look at the momentum indicators on the daily, weekly, monthly charts. They are at excessive levels. That should get your attention. Three, we had reversals, downside reversals on corn and wheat last week, and those should be respected. Now, let's go back to soybeans again. When I look at the correction we've had, and I look at the Elliott wave pattern, it shows that we might be in a wave 4 pullback and possibly could see one more high in both the July and, say, the new crop soybeans before this advance is over. I look at the soybean oil on the July, December contracts. They're showing we're probably in a wave 4 pullback, could see one more high. Once that is done, then, you know, we could be looking at a big sell-off. The thing to remember about China and the agreement, they have a history of not fulfilling them.
Yeah, good point there. And, you know, that's actually a question I've posed to our trade groups and specifically back over to USDA. Okay, so we get a trade deal. Where's the teeth? Because we don't have a World Trade Organization now to rely on. You don't have, if they're the principal, if you will, you can't take them to the principal's office because nobody's in there anymore. So any thoughts on how we hold somebody's feet to the fire?
One thing about China, I've had a little experience with that in the cash grain business. You want the money in hand.
That's one way to put it. Okay, Dewey, hang on. We're going to take a break. We'll come back and see if we've got enough money in our hand to buy some more steaks. We'll find out next. This is Market Day Report. $265 a hundredweight. That was cash trade last week. And it started the week on Monday with $260 as Packers got busy and started buying, and Needed to buy some more by the end of the week, and that's how we ended up at 265. Now, June live cattle right now are higher, but we're not chasing that 265. We're holding steady at 254.37. Look at the trade range here. It's $1.77. 254 on the bottom to 255.77. Now, all contracts are moving higher, but these are just fractional gains. And I guess you could say these are fractional losses in the feeders. August down $1.70, 359.85. And then the hog market, can we turn the corner here? And June is really a good example. We can't close above that $100 mark. Does that add more pressure to the hogs? 99.07, it's up 32. Deferreds are in the red. Dewey Strickler's with AgWatch Market Advisors. Dewey, what are you watching here?
Well, look at the cattle here. I thought that they would be a little higher today, a little bit disappointing with the agreement over the weekend that China would increase their purchases of beef and also poultry, but we're not getting much response out of it. Technically, I look and see if the cattle can get above this high of 256.62. They may run up to about 263. Other than that, that's about all there is. When I look at the hogs, I look at the June contract working down to about the $96 area.
Yeah, again, it just seems like that June contract has really struggled. You know, we moved up above the $100 mark and just have not been able to hold that. Final thoughts before I let you go. We hit in 1 week the unofficial grilling season. What are your thoughts moving forward for consumer and demand?
Well, you know, we got Memorial Day coming up. There's no, nothing has changed. The consumers are really strapped for cash here. And, one other thing, too, we did not mention, and that is we're looking at the bonds. The bonds have set a new yearly low here this past week, which means interest rates are creeping higher here. So that's just going to be one more thing here that's going to be put on the back of the consumers. So, I think, we'll probably get through the holidays here, 4th of July. And then after that, the seasonality is going to turn lower. And technically, we're probably going to be seeing some tops in the cattle as well, too.
Yep, good points, Dewey. Can always count on you. Thanks for coming by. Dewey Strickler's with AgWatch Market Advisors.